Hey, California homeowners, if you thought mortgage rates were the only thing squeezing your wallet, think again. Insurance companies are pulling out, rates are skyrocketing, state regulators are pushing back. Welcome to The Breakdown, where we unpack the biggest trends shaping the real estate market. I'm Ben Belack, Beverly Hills super realtor, and one of the top producing agents in the country. With over $1 billion in closed sales, I've seen firsthand what makes or breaks deals in one of the world's most competitive real estate markets.
This is a nightmare.
Someone call for a nightmare? Like a good neighbor, State Farm is there.
State Farm, the largest insurer in California, recently asked for a 22% rate increase for homeowners because they have received over $1 billion in claims so far from the recent Los Angeles wildfires. That's a huge number.
I am never going to financially recover from this.
But here's a twist. California Insurance Commissioner Ricardo Lara denied their emergency request, saying they need to justify those numbers before passing the costs on to homeowners. And honestly, I get both sides. Insurance companies are bleeding from massive payouts, but for homeowners, a 22% increase is brutal, especially in a state where home prices and property taxes are already some of the highest in the country. Now, let's be real here. This all ties back to wildfires. In just the past year, the Palisades and Eaton fires alone cost $30 billion in real estate losses.
The American dream is dead. Billions and 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 billions.
These disasters aren't just tragic. They're reshaping the entire insurance landscape in California. And because of this, major insurers are either leaving the state, refusing to issue new policies, or hiking rates to offset the risk. If you're a homeowner or you're looking to buy, you might struggle to get coverage. Or you're going to pay a lot more for it. Why did the state block the rate hike? California's insurance commissioner says insurers need to be more transparent about why they're increasing costs. Instead of letting them pass the bill straight to homeowners, the state wants insurers to justify their numbers and prove these hikes are necessary. Now, this is actually a California law, thanks to Prop 103, which requires insurance companies to get approval before raising rates. It's designed to protect consumers from price gouging, but in today's insurance climate, it's also leading to insurers leaving the state entirely.
I'm out of here!
While it sounds great in theory, the question is, are we just making it too hard for insurers to stay in California? All right, so let's talk real world impact. What does it mean for you if you're a homeowner, a seller, or a buyer in California? Well, it means higher premiums. Even if State Farm's rate hike is denied, other insurers are still raising their prices. Expect your premiums to increase. There will be fewer insurance options. Some companies are stopping new policies altogether, which means fewer choices and tougher approval processes. It might be harder to sell homes if a buyer can't get insurance. They can't get a mortgage. This is already slowing down sales in the wildfire-prone areas. And California does have a last resort insurance plan called the FAIR Plan, but it's expensive and it only covers fire damage, not theft, liability, or water damage. Before you think this is just California, let's zoom out. We're seeing insurance companies pulling out of all high-risk areas. Rising premiums and tighter restrictions isn't just happening in California, it's a nationwide trend. In Florida, some insurers have completely pulled out due to hurricane risk. Texas and Louisiana are seeing massive premium spikes thanks to flooding and storm damage. And in some cases, homeowners are literally being forced into state-run insurance programs because private insurers are just saying,
No.
And just like in California, regulators in those states are struggling to keep companies in the market while also keeping policies affordable for homeowners. So what's the solution here? How do we fix this mess? It's complicated, but here are a few things that need to happen for homeowners to get some relief. The states need to create incentives for insurers to stay. They need to incentivize insurers to make sure they can stay in California without going bankrupt. If companies keep leaving, we're only going to see higher prices and fewer options. Homeowners should be rewarded for making their homes safer. If you invest in fire-resistant materials, defensible space, and smart building techniques, your insurance should reflect that. And we need to see exactly why rates are going up. Are they really necessary, or are companies just using disasters as an excuse to hike prices? This issue is bigger than just California. If we're seeing major insurers pull out of multiple states, maybe it's time for federal level discussions on how to manage risk in a way that protects both companies and consumers. If you're a homeowner, I know this is frustrating. You're already paying more for everything, housing, utilities, and now insurance. But the best thing you can do right now is to stay proactive. Check your policy, get quotes from multiple companies, and make sure you're taking advantage of every discount available. And most importantly, stay vocal. If you think these rate hikes are unfair, let your state representatives and regulators know. The more people push back, the more likely we are to see real change. All right, now I want to hear from you. Have you seen your insurance rates go up? Are you struggling to get coverage? Let's talk about it in the comments. And if you found this helpful, hit that like button, subscribe, and I'll see you in the next one. We'll keep breaking it down here only on Estate Media.